And then we'll go to Dharmesh on a few stocks. It remains in focus after the stock is at the high point of the day, now double-digit gains. Let's talk about the bull versus bear case, about what's happening in NATCO Pharma. Varsha, take it away.
Thank you so much for that. NATCO is one such company which pegs on margin rather than volume, and also plays on the exclusivity game. Let's see what is bull and bear case when it comes to NATCO Pharma. Starting with Adcock Ingram, which is the recent acquisition of the company, and crop health segment are actually doing well for the company. But Revlimid, which is a cancer product, and CTPR, which is into agrochemical product, these two products I would say dominate the most, and the portfolio lacks visibility. Well, moving on. If I were to talk about the full year PAT guidance of rupees 1,275 to 1,300 crore is still positive for the company, but H2 margin may see impact. This is on the back of rising Revlimid competition. Well, talking about the R&D spend for the company is expected to cool down, which will actually aid profitability for the company. But US launch pipeline stays dull till FY27 and 28. So here you will see pressure overall in US business for FY26 altogether. But this may also be a bull case considering the long-term growth that the company will see because of the US launch pipeline, which is strong when it comes to 27-28 is the next bull case for NATCO Pharma. Talking about the complex launches, if I were to talk about the complex launches from FY27 and FY28 can revive US, but India's semaglutide faces heavy competition. So every pharma company is actually betting on their GLP-1 product, anti-obesity, anti-diabetes, but this semaglutide will face heavy competition in India, which is the bear case for the company. Well, talking about the crop healthcare business is actually seeing gains versus the lower launches by competitors. So this is expected to do good when it comes to the company, but rising R&D and expansion cost may impact margins going forward. So overall, it's a good company considering how they don't concentrate on volumes but on margins, and exclusivity game is the main growth driver for this company, and hence the bull case is actually strong when it comes to NATCO Pharma.
So NATCO Pharma in focus, and thanks so much for talking about what might work and what might not going forward for this company. But Dharmesh, I want to come to you. We're seeing quite a bit of enthusiasm, quite a bit of optimism on the street, if you can call it that, today. But I want to push you to talk about maybe 2 or 3 stocks that you absolutely would go out and buy today based on valuations and prospects in this kind of a market.
Thanks for having me for the show. I mean, see, the enthusiasm has been there, and it is rightly been there, because if you go by Q2 numbers, that was not that bad, the type of selling which we have seen. And this was the first time where I've seen, in spite of having good numbers, all the headline tailwinds into place, be it a tax cut or low inflation and no headline bad news in the market, still there was a selling and mid and small cap stocks. So 2-3 stocks which I would like to pick up in this market for next 3 to 6 months. One is Orion Pro Solutions Limited. It's an IT company, particularly into banking software. 52% of the revenue comes from cash management and working capital management for the corporates in the banks. They have already won orders from SBI and Union Bank, and multiple orders should be onto the floor. It's a 30% compounding kind of a profitability, which we see going forward because data center business is picking up, which contributes 19% of the revenue, as well as the mobility business, that is the metro ticketing and open transit system. So that looks pretty well to us. Welspun Corporation, again into a LI pipe and DI pipe kind of a business, having significant presence in the US, and there is no tariff related problem out there. It's already full for next 2 years of capacity. 18 to 20% CAGR is expected on the profitability out there, and it's cushioned with the input prices. So anyways, steel prices are low at this given point of time, but going forward also it's cushioned to that extent. And the data center is a lot of data center capacities are coming in the Texas region of US, where nearby they have the facility for this LI pipe. So again, it augurs well for the company. I think valuation wise is comfortably placed
markets,
around 12
yes.
30 times.
Yes, Dharmesh, the markets are also celebrating